The trading community today is struggling with lower sales volumes, smaller shipments, and more demands from our consuming base. The consumers of steel, they are operating from low inventories, and these low inventories that people are holding around the world obviously mean that each shipment and each production that is made of the steel is more, it requires more precise timing for delivery. As you will see when you're looking around in the state of Qatar, that there are a tremendous amount of building cranes, and if some pieces of steel are missing, then obviously some buildings may not be able to be finished on time. So these are the concerns for the traders. We have to be more on time, we have to be more competitive, and it's not allowed to deliver material that is substandard. We have to comply with the highest standards, and that's one of our obligations in order to control the production and to ship material, especially to this region, of the highest world standards. Bent and Francis here are on the panel, and we'd like to have both of them introduce themselves.
Introduce myself, okay.
Yes.
Okay, I'm Francis Alexander. I'm the chairman of Steelforce, an Antwerp-based trading company with several overseas offices, mainly active on Africa, South America, Central America, and also on the Far East. We are trading about 1.8 million tons of steel a year to different destinations. That is, it's a shortcut.
All right, good morning. I'm Bernd Neunkirchen. I'm the Vice President for Long Products of Cotino and Ferrostal in Houston, Texas. We have also an office in Hamburg. We're a German-American company, and I've been handling long products for the last 10, 12 years. And yeah, that's all to my person.
Okay, the venue is such that we are going to ask a couple of questions and have a discussion of what we discussed yesterday evening. And we strongly suggest that if someone has a question, to interrupt or to bring other topics that might be interesting to the audience. The first question that we always ask at the Europus is that since we had the last meeting in Munich, for those who were there, we talked about how the market has changed in the last 6 months. So we had a general discussion, and we assumed that since the last 6 months, the business climate has improved and that we remain cautiously optimistic. Now, since we're in the GCC area here, I presume that everyone is usually optimistic. Does anyone from the GCC area here would like to say something about what their views on the business climate for the steel products in your region? So that means that everyone agrees with my statement. The next question is that when we're making plans for the budget in November, December for our various companies, we are sitting down and making a careful analysis, a prudent analysis of whether we are going to try to be defensive to maintain market share, to try to remain profitable, or to try to expand our business into new areas. Francis, what do you think about this kind of?
Well, as far as we are concerned, I think our budget for this year is very similar to the one of last year. We are quite optimistic as far as tonnages are concerned, but we see that the pressure on the margins are getting tougher every day. And this is also because in those countries where there is still good activity, more and more of the traders are present and fighting between themselves.
Well, we're not fighting.
No, not you.
Right. And yes, I more or less, I think I have the same opinion as my two colleagues here. I see the business for long products in the US as relatively lackluster. I think that's the word. It's not bad, but it's definitely not very strong either from an importing point of view. There are lots of reasons for it. I will get into some of them a little bit later when I talk about the conditions in the US. It's so-so, and it has everything to do with the overall economic situation in the US. And we expect for this year actually a very weak year as far as long products are concerned. We all hope that there will be a big turnaround in 2014. Last year we hoped for a turnaround in 2013. So one has to be optimistic.
Well, for my comment, our company dramatically shifted our sourcing base from Nucor USA to third-party sourcing during 2012. But we believe that in 2013 we're going to be able to be competitive and export more steel products from our own facilities in the United States. Last year we produced 20 million metric tons of steel, and the forecast is to increase that by about 1 million tons in 2013, and we believe that a good portion of that will go into the export markets. The next question is, how do the traders feel about wire rod and rebar inventories? Are they too high, too low, or about right? Now, obviously, that kind of answer depends highly on where you're talking about things. But for example, one thing that I think most people are not so well as aware as Mr. Alexander here is that the inventories in the African countries, are they still living hand to mouth, or are they changing?
No, I think that the inventories, especially in Africa, are at a normal level for them. Of course, especially in wire rod and debars, the consumption is slowly increasing, but every year increasing. And as I said, competition gets also tougher. As far as, for example, Europe is concerned, well, due to the economical climate, I think stocks are very low because customers can get some of their products easily within 1 or 2 weeks, and they buy very small tonnages. On top of that, especially in Europe, for the distributors and also end users of long products, the main problem is that the credit insurances have reduced very drastically the credit limits. So most of the distributors or mills are struggling with this problem.
Yeah. As far as the US are concerned, my view is that the inventories are just about right. I mean, the rebar inventories go up and down. It depends with the big shipments that come in from Turkey or so, then the inventories go up a little bit, but by and large, they are just about right. And when I say just about right, it means they're lower than they used to be. We have what I call a new normal. The new normal is that people, for rebars and for wire rod as well, and for actually all steel products, live from hand to mouth. They don't have the 3 months in inventory anymore. They have at best a 2 months in inventory. In some cases, as far as my customers are concerned, a little bit less even. So it's they don't want to be caught in the same kind of predicament that they had in 2008 when we had a huge price drop. So everybody is more careful. Everybody everybody orders less tons, but probably more frequently. So, but by and large, I would say for long products, inventories are just about right based on the new normal.
Then we go on to the next question, and that is that most of you here in the room realize that in your own regional area that sometimes flat products are more expensive than long products. And since Eurapis, we're talking about long products, It was noted yesterday that in China, for example, flat products are more expensive than long products. In the GCC, flat products are more expensive than long products. But in the European Union, the prices for flat products and long products is basically about the same. And in North America, the price for long products was, until maybe 2 weeks ago, higher than flat products. And so this reminds us all that it is a demand-driven pricing mechanism, in that where you have markets that have demand for or shortages of material, for example, the GCC and flat products, there then the prices are higher than long products.
Yeah. And that's the same in the US as well. You alluded to it a second ago. The flat prices, and I mean the hot roll coil price, went down quite a bit late last year. I think that it went down as low as $27. I didn't see the wire rod prices. They're far from it. And the rebar price didn't go that low either. We had some dramatic price increases for hot roll coils in the US lately. I'm not so sure if they have all gone through, but if I add those to it, I think hot roll coils are pretty much catching up. They're not quite as high, in quotation marks, as high as wire rod yet, but they're getting there.
Then no meeting about the RAPAS could be complete without discussing which is better, to be making rebars from iron ore or making it from scrap.
Well, it's easy for me to answer as far as the US are concerned, because as far as long products go, most, if not all, of our steel is being made from scrap. So the scrap price is the big factor in the pricing. And sometimes, you know, the laws of supply and demand that we all heard about in university or in school don't apply, because we have to go up and down, or the prices fluctuate the way the scrap prices fluctuate. I do see a correction every once in a while when the market forces do prevail over the scrap price. But as far as the US is concerned and long products are concerned, we do depend on scrap, and scrap is a huge factor. Over the last 4 or 5 years, we all had to become experts in the scrap prices.
Francis, could you talk a little bit about the increase in induction furnace production capabilities in the African market?
Well, yes, okay. As far as debar production is concerned in Africa, we see in many countries induction furnaces coming up, and also a local protection of the export of scrap. You may have all read that, for example, Ghana will now introduce the law that you cannot anymore export scrap. One of our customers is building a furnace and has good political relations, so he gets this export ban. And I think we see in all these countries, especially West Africa and East Africa, we see in all these countries some smaller rebar producers coming up. We don't know yet which effect this will have on imports, because in a lot of those countries there is still a huge problem with electricity, so we don't know if the theoretical capacity will ever be produced.
On that same topic, we can move over to discussing about the increase of domestic production in places that have been typical importers of steel. In the GCC area here, if you go back 15 years, there was hardly any production of deformed rebars compared to the market. The market has grown dramatically, and we have now new projects coming up in Saudi Arabia, projects coming up in Bahrain, and there is more of a balance in the situation for the domestic consumption, that they have power to choose in between domestic production or imports. And the domestic production, of course, is the base, and the imports that are needed as we go forward will depend on the demand or the speed of the infrastructure spending in the area. We also noted one trend that, for example, the trade in between the GCC or the GCC area is starting to take new forms. For example, rebars being shipped for the United Arab Emirates up into southern Iraq. And that means that there's more of a balance in this local area. So the question that came up last night was, does this mean that this is a trend that's going to stay now for a long time, or is it something that is going to be amended by more production and less imports, or is it going to be a balance? Does anyone in the audience here have a view on that? For example, by the year 2020, will rebars no longer be imported into the GCC area? Is that a viability? Okay, we can think about that individually, as I say. We also talked about the element of protectionism that is starting to become more politically acceptable with the various governments. That the governments have a choice in the GCC area, especially, that infrastructure spending on high rises, and spending in order to increase the economic development of the region means that they need to have low costs, because the lower the costs, then the more projects can be commenced. And hopefully in the future, the payback will be larger. But what does it mean, for example, if rebar prices are $1,000 a ton, would that curtail the production? And this kind of balance in between low prices, easy availability to steel products, and infrastructure spending is something that we have to keep track of, so we don't end up in a type of bubble as we did in 2008.
If I like to chime in here real quick as far as the protectionism is concerned, I mean, anti-dumping suits for steel in the US are never far from the surface. So when I look at the numbers right now, wire rod, the imports by traditional standards are relatively low. So I don't expect any big wire rod suits there. China came on strong, but I don't think that that's anything is going on as far as anti-dumping suits are concerned. Some people have expressed concern about the huge imports of rebars we've seen into the US lately. And the Turks do dominate the import rebar market in the US. They imported 65% of all imported rebars last year. Some people point to that there might be something coming up. Imports in total of rebars are still relatively low by traditional standards. I mean, I looked at the numbers, and Turkish imports in 2012 were the highest since 2006. But I mean, in 2006 and prior to 2006, the total imports that we had in the US for rebars were over 1 million tons every year. Right now, the total numbers for rebars last year were a mere 885,000 tons. So by traditional standards, we're really not going up with rebar imports. It just feels like it when 106,000 tons come in 1 month from Turkey, as happened in the US in January.
I can make a comment concerning the relativity of numbers, because it's very easy to comment in between 800,000 tons and 1 million tons and so forth. But for example, in 2009, Saudi Arabia consumed more rebars than the United States. Mm-hmm. And Saudi Arabia has a population, correct me if I'm wrong, of approximately 30 million people, and it consumed more rebars than the United States with a population of 300 million people. So these are dramatic developments. In 2006, 2007, the United States had consumed approximately 9.5 million tons of rebars. And then by the time 2009 came around, the consumption was down to 5 million tons. So those are dramatic changes. And if you look at in Saudi Arabia, I don't know exactly what the consumption figure will be, was in 2012, but can someone offer a number? Was it 7 million tons? Sir? 800,000 tons a month. Would you venture to guess what percentage is imported and what is domestic?
It's about 200,000 tons a month.
200,000 tons per month import. Does anyone else have any statistics like? Please continue.
Actually, I got these figures from, I think, from the Saudi people yesterday. So if they are here, they could reaffirm these figures. That it's 800,000 tons a month of consumption in Saudi Arabia, 200,000 imported from Turkey and the neighboring countries like Qatar and UAE.
Yeah, there seems to be more of a trend within the GCC that there's more trade in between the GCC countries.
Yes, this is happening. Because there are more now. Some rolling mills in the UAE now, they're shipping 50% of their volume to Kuwait and to Saudi Arabia.
Okay, thank you. These are very large numbers, but let's all remember that China produced 145 million tons of rebars last year. So the absolute size of the Chinese market is just amazing. Obviously, the trading activity of Eurapus members has been heavily affected by political and economic situations across northern Africa and the Mediterranean. Morocco has become very silent in our line of business, primarily because of lower demand for Moroccan products in Western Europe and overcapacity of steel production inside Morocco. Then the next country, Algeria. Algeria has been a motor for the Southern European long product and steel producers due to free duty imports. And that country has been a very vital component of the long product steel trade for us all. Tunisia has been very dormant in the last year and a half. And we're waiting to see for things to become back to normal there. Libya, of course, is struggling to get back, but it looks very promising for the future. Egypt is also a very important market for our members. The Egyptian market is also facing political uncertainties, but they're also facing political uncertainties concerning electricity costs, natural gas costs, and so forth. When all of these important countries for us all return back to normal or improve from the normal, obviously it will be a great boost to our business.
Right. Okay. One thing I wanted to draw your attention to, it seems that there is some movement in Algeria where the local re-rollers are not very happy with the imports from Europe, and it seems that the billets which have now to pay a little bit duty will be duty-free, and maybe will change also some duties on the D-bars. So I think if this happens, unfortunately for our European producers, I think this would be dramatic.
Yeah, I like to add a little bit as far as the US are concerned. Again, overall, as I said a little bit earlier, I perceive the market as relatively weak, and it mirrors very closely the overall economy in the US. It's not bad, certainly not compared to most European countries, but it's not good either. We just cannot seem to get over the hump where we just go into overdrive. We just plug along, we just plug along, and we don't hit a stride where we can come up consistently with a growth of 2% plus. In the last quarter of last year, in quarter 4, we even had a little bit of a contraction. So, I mean, as I said, it's lackluster. I want to give some numbers here. There are published numbers by the U.S. Trade Department, Trade Ministry. The total rebars last year in 2012, the United States imported 884,000 tons of rebars. As I said before, by traditional standards, it's not all that bad. It was, though, the highest since 2006, but in 2006 and 2005, we imported over 1 million tons of rebars. By far the largest importer of rebars into the US are the Turkish mills. They had a share of they had a share of 65%. I mean, 2/3 of all the rebars last year came in from Turkey. They had the second largest importer was Mexico. The Mexican rebar mills have positioned them very well, in as much that they can supply on short notice. They come in mostly through rail cars, but they are, as far as tons are concerned, way behind. The latest numbers are the first 2 months of this year. In January, Turkey had the aforementioned 106,000 metric tons, which caused quite a stir in the industry. The preliminary numbers for February show 87,000 tons. I expect that number will be going up when we have the final ones, because the 106,000 tons did not include import licenses that were filed, but where the shipments are coming in February only, and there was an overhang of roughly 25,000 tons. So if I do the math right, I expect maybe rebar imports for February to come in at 120,000 tons from Turkey alone. And as I said, that does raise the eyebrows of the domestic mills. As far as wire rod is concerned, we imported 970,000 tons, so almost 1 million tons last year. It's actually a larger market than rebars, but everybody seems to be talking about rebars, not about wire rod. The largest importer of wire rod is Canada. I mean, they're close by. And these numbers include all kinds of grades. It goes from low carbon to high carbon to all kinds of specialty grades. So Canada is the largest importer of wire rod. I looked at Turkey. Turkey imported last year 150,000 tons of wire rod, which by traditional standards again is low. I remember years when Turkey had 500,000 tons of wire rod, but I think I've seen a shift by most long product mills in Turkey to rebars over the last 5-6 years. China imported 60,000 tons, and again, these are government-issued numbers. A little bit low as far as I'm concerned. I thought I saw a lot more tons coming in from China, but it could very well be that the ships arrived only in January and hit the market now. The published price, these are public numbers that anybody can access at the Trade Department website, so I can talk about it. The published numbers for wire rod imports, the average price for last year was $714 from Turkey and $663 from China. These numbers are supposed to be FOB. I don't have much confidence in the data entry there because A, it's being kept by the government, but the actual data input is done by the importers, by the traders. And sometimes maybe they get the prices mixed up because $714 FOB Turkey and wire rod last year, I mean, I leave it up to the Turkish mills to tell me if that's correct. China, as I said, was 63. As far as rebars are concerned, the published price last year, let me see if I wrote it down. Oh, the average published price for Turkey last year was $645, again, supposedly FOB. I mean, towards the end of last year, it probably was more a CFR price, but again, it's an average price. The average price of imported rebars from the world into the US was $651, so the Turkish mills are tracking very closely to the average world price. The price from Mexico, the average price from Mexico last year was $643, so roughly par with Turkey. So at least, and I don't want to spend too much time on it if it's FOB or CNF, but you can look at the trend. And the trend is that Mexico, they do position themselves in such a way that they can deliver on short notice, and they have to watch, obviously, the Turkish imports, and the prices are very close to the Turkish imports. Overall, as I said a little bit earlier in the opening remarks, I'm probably not as pessimistic as I said before, but I'm cautious because, I mean, we just don't seem to get going in the US as far as consumption is concerned. Whenever we think now it's coming back, it's going up, then we have bad news again. Then we have the fiscal cliff, which I thought we had survived, but now it's the sequester that everybody is concerned about. Not that that has so much of a direct impact on us, but people find a reason, all these big things that we talk about every day, to be afraid to buy a lot of steel. And that's why, as I said earlier, overall for the US, long products are doing well right now from Turkey, but I think overall for the rest of the year it might be coming down a little bit.
Okay, thank you, Bernd. It would be nice to be able to tell the crowd here today that the steel price will be X in 2 months, but we can't do that. There are several key things to look forward to in the next 3 months as to where the steel markets will be going. One of the most important things for steel markets and steel pricing and supply and demand to work is a GDP growth of more than 2%. Most economists say that we should have a GDP growth of 4% in order to spur people to have more inventories, to have more optimistic outlook and be willing to pay cost plus profit in order to sustain the steel industry. In the GCC area, I'm not knowing the numbers offhand, but I presume that most of the GCC countries are growing more than 4% in 2013. So that means that demand cycle will be working in the GCC area. And if you look over in the United States and Western Europe, we're looking forward to in between +1% and -1% total growth. So that is below the threshold of 2% in order to keep the supply and demand mechanism working. So, and then we have stories, and I say the word stories, from China talking about 7.2% growth for 2013 or something like that. What the real number is, we really will not know unless we see where the pricing trend is in the domestic market in China. Today, the Chinese steel producers have little pricing power. They produce what people can afford to pay. And the market is muddling through. So when you're in a market that has a growth rate of more than 2%, okay, supply and demand works. If it's less than 2%, we all have to get up very early in the morning and try and figure out how the pricing will be finished at the end of the day.
And that's true, and that plays right into the role, of course, or into the favor of domestic mills. because, I mean, everybody is afraid, everybody is cautious, I should say. Everybody is cautious, and they rather keep the inventory relatively low, as I said before, and that helps the domestic mills. They get orders now on a monthly basis. I mean, I'm old enough that I remember the times when we fixed prices on a quarterly basis. I mean, I sold for a domestic mill a little while ago, or some years ago too. So it was always on a quarterly basis, but it's definitely done on a monthly basis because everybody has to watch the scrap price and everybody wants to keep their inventories on a manageable level. So, as Michael said, I mean, if the GDP growth is less than 2%, it doesn't help the importers because the demand is such that the domestics can dominate that market. Now, in my opinion, I mean, 4% for a mature economy like the US would be enormous, of course, and very hard to sustain for a long time. But we didn't see it. We were supposed to see it after the big recession that we had in 2009 and 2010. But it never came. The growth was always in that 1.5 to 2%. Sometimes it went to 2.1, but most of the time it was less than 2%. Now we are less than 1%. And that's the big frustration.
So we've been very effective. We've run through the list of questions that the Traders Committee discussed last night. The time allotted is including lots of questions from the audience.
I would like to hear from especially the Turkish people here in the room, because the Iskenderun area is of course very depending in the debar business on the situation in Iraq, Iran, Syria. What they believe could happen. I don't know if anyone wants to answer that question.
Any question from the audience?
So a reply from the audience from someone that is a Turkish expert.
Yes, there's somebody.
Please, microphone here.
Hi, Hassan Rumani. It's very volatile for the time being because the things could change very easily depending on this political issues, especially in Iraq. And basically the fight between the central government and the Kurdish zone. And when the things get out of control, then they immediately stop buying any cargoes from Turkey, and which we have seen in the past months, let's call it, in the last couple of months. But normally they are there to buy, and we know that more and more their rolling mills are being invested in the Kurdish zone. So they'll be maybe getting more billets and then producing and rolling and getting their products out. And also their investments made in Basra, which they are trying to reactivate one of the old steel mill, and also the other expansion that the other investment on the Kurdish zone. So there will be more internal trading activity that we expect in that particular part of the world. And as far as Iran is concerned, they are not so active as we used to see them in the area. And the payment problems is again like the major still swing in the market. And they are not so active. Are they disappeared? No, they are not. But they are not as active as they used to be. But let me raise another point today. I think it's an interesting issue that we have to see, and I just would like to hear your view or general view. Which is, I was just going through the mails this morning. I have seen that there are new housing regulation changes in place in China, which came on stream, and according to these new restrictions, they put in a new control measures on the Chinese housing sector, and that really push the general, the Chinese demand down approximately 3%. What they are saying is they are now increasing the down payment percentages for the Chinese housing industry, and mortgage interests are going to be increased, as well as, with some other measures. They put like additional tax on the sales of the houses already been bought. They increased a 20% tax from, whereas it was 1% on the sale of these houses. So that means that they are trying to cool down the economy, and because of this, we heard today the major housing companies in China, like China One and the Polyreal, are down 10% their shares. That means that these things could really affect, the question is, are we going to see another Chinese invasion to the markets, and then, with the slowdown in the domestic consumption or the sector are going to affect the market? So, that's my question. Just want to hear. This was the fresh news that I got today.
Did you happen to notice what the fresh news was on the iron ore price spot today?
It's also down.
Okay. How much? I haven't seen.
There's no trade this morning. The fresh trade, they are not in the market to buy, so they are holding off the purchase.
Yeah.
I just want to say a little bit what you mentioned. Can we expect another invasion of Chinese goods? They come in and out as long as they can, and from the US point of view, as long as there's not a dumping suit against them. We see it on a regular basis in wire rod. They came back into the market, let's say by the middle of last year, absolutely tore it up, at least the import market. And now, for reasons that are more have to do with internal conditions in China, they have kind of left it, not really left it, but they increased the prices. So they obviously are not as interested in exports to the US right now, because they went up with the prices and are pretty much at world standard now. But this coming in and out of the market, I think we will always see it with certain products out of China, and it has everything to do with their domestic situation.
Well, I think, first of all, for the European producers, it has only an indirect effect. Wire rods have a considerable anti-dumping duty. In Europe, each and any country has its homologation system for debars. So it will only be on those markets where there is really a free trading of those materials that European suppliers, for example, will be influenced. I'm talking especially, for example, to Africa. There, the Chinese, especially if the iron ore price goes down, because there are still quite a lot of wire rod producers and debar producers out of iron ore in China. So if iron ore price is going down considerably, we will see in those markets the Chinese producers coming up again, and this will have an indirect effect, for example, on European producers.
Yeah, to be noted back to China is that Chinese rebar export prices are better for the producer than the domestic market. And the domestic market is also not able to find enough capital in order to pay for substantial purchases. So there you have a situation that is almost like in Italy and Spain, that the exports is a vital component of their business strategy, except that in China it's a very, very small percentage of the total production that is being exported, whereas in Italy and Spain it's a substantial part. So it's important to watch the iron ore price, it's important to watch the housing prices in China, even if you're living in Doha, Qatar. It will eventually affect us all. So, last chance for any further questions. Otherwise, I'm sure that there's still some more hot coffee and cold beverages outside. Okay, you're all welcome back this afternoon for the various presentations that are being given. And reminding you that on Tuesday morning, there's going to be all of the participants in the IRAPAS conference will be in this room, and we'll be discussing the point of view from scrap, from producers, from traders, and a general comment. And please prepare those questions, because there's going to be lots of people available here, and this is the best chance to get them answered. Okay, thank you very much.